technology is a really rapidly evolving sector. And we've talked about it a few times on this show that technology is changing the financial sector.
Sure. Oh, yeah, absolutely.
And the question is, how is it affecting small banks? I was reading a 10K, I think earlier in 2015, and on a small bank's like in their like little announcement section at the beginning, they're like, we just released a mobile banking app.
Yeah.
And it was 2015, and I was like, how?
No, it's a fair point. I should have mentioned that earlier. That's another thing driving up costs or driving up fixed operating costs for smaller banks, that they would seek to sort of spread that cost across a wider asset base, because having your own mobile app is expensive. I was laughing not long ago. Carter Bank, I think their big triumph in 2014 or 2015 was introducing telephone banking, which is like years beyond the mobile or behind the mobile app space. Mobile banking, internet banking, payment processing, Apple Pay, those are all things that are, interesting and hard for small community banks to adapt to. They're certainly trying. I mean, it's table stakes stuff now, in order to compete and hang on to those deposits are probably loyal only to a point, where they want to be able to take a picture of a check and deposit it, or use their fingerprint to buy something, or so on and so forth. There's an interesting company in Austin, Texas called Q2, and they do... it's a public company, QTWO, Q2, and they do sort of outsourced mobile app and internet banking design for community banks. And it's been very fast growing for them, because they sort of have an out-of-box solution. They can customize the design, and they're happy. They're hoping that by gobbling up or getting business from a lot of small banks, as those small banks get acquired, their technology would get adopted by larger and larger banks. And they get paid on a per user basis. So, obviously having more users would be very good for them. No bank is going to have no small bank is going to have an IT department of 100, 200 people. So, certainly the outsourcing and development of those sorts of things is driving costs up, and is another thing pushing consolidation.
That's really interesting. This is kind of an ongoing conversation on this show about how financial tech is changing the sector. We had a pretty long show about Apple Pay the other day as well. And it's interesting to think about these kind of like, I don't want to call them bit players, but people you just don't normally think about, and how it is going to affect them, because like JP Morgan and Bank of America, obviously they have like huge buy-in on these kinds of things. But
this is a little bit farther field from small banks, but it's a fascinating point. I mean, Apple Pay, Apple takes a huge cut.
Yeah.
If you buy with Apple Pay. But the data that I've seen from their side is that if you install Apple Pay in your app, the take rate on whatever you're selling is like goes to 3 to 5 or even 10x, which you would get without having Apple Pay.
That's insane.
And so you make it up in volume, what you lose on commission, but it's sort of like, it's almost like a deal with the devil, right? You're like, I got to give away 30% to Apple. Maybe I don't want to sell 1 million units. Maybe I do. That's a math problem at the end of the day. But ultimately, one would expect prices to come down in that space.
Eventually.
Apple,
well, and there are competitors with Apple Pay. There's I can never remember if it's Google Wallet Android Pay or if it's flipped. It might be the other way.
When you look at the commissions Apple Pays get, there's certainly incentive to compete.
And then of course there's Walmart with their MCX payment plan, which is eventually going to get rolled out. So we'll see what happens with that, since they have so many major retailers in it.